All right, what's going on, YouTube? Let's get into it, man. Liberation Day retaliatory tariffs went into effect April 2nd. I'm sure you all have seen the fallout. We're starting to get retaliatory tariffs back in retaliation. You've heard what China had to say. They've issued tariffs back, but that's not what we're here to talk about. Today, what we're here to talk about is, the numbers. Another investment for beginner investors to take advantage of, especially during a time like this. So let me run some stats by you real quick before we get into it. You see, we have the NASDAQ 100 pulled up, and it is down year to date 16.34%. We are officially in bear market territory. $1.5 trillion was wiped from the stock market at open this morning, and we have lost over $9 trillion in the stock market since inauguration day. So that's what's going on, man. That's what's going on with the Trump economy. The stock market is in shambles right now. There's a lot of uncertainty, but I don't want you guys to panic. I don't want you guys to worry. We like to have a plan over here. We are intelligent, long term investors, and that's what we preach over here. So, with that being said, as a new investor, someone looking to start or build out a long term portfolio, someone looking to dollar cost average into something, I'm going to give you another investment, that I personally love. I personally am invested in, and one that I think should be, at the very least, on the radar of any new investor looking to build out a long term portfolio. And that would be QQQ and QQQM. So, we're going to talk about some differences they have, how they're alike, and which one may be better for you, depending on what you need or what you desire, as a investor. So without further ado, let's get into it. Here you see we have this pulled up, and this is a comparison. First, let me start off. QQQ and QQQM are both products brought to you by Invesco, and essentially they're pretty much the same. They're pretty much the same. They have some minor differences that we'll get into, but they're pretty much the same. The holdings pretty much the same. The percentages as far as the holdings may be a little different, but they're pretty much the same. And we'll get into the differences and how they're alike and which one may work best for you. So, QQQ, QQQM, as you can see, QQQ was established in, I believe, in 1999, and QQQM, was established in 2020. As you can see here, this is a chart, that will span the lifetime of both funds, ETFs. As you can see, since 2020, QQQM and QQQ pretty much chart the same. It's pretty much identical. You see the up, the down, the up, the up. Got me? So let's get into how they're different. And then we'll get into how they're the same. No, we'll do how they're the same first. How they're the same, look here. Look at the holdings. You know, the holdings pretty much the same. You may have some differences in how those holdings are weighted within the fund, but for the most part, the holdings inside of QQQ and QQQM are pretty much the same. Now, QQQ and QQQM, I forgot to mention, are ETFs that track the NASDAQ 100. For those of you that don't know what the NASDAQ 100 is, it's a pretty tech heavy index, and it's the top 100 companies in the NASDAQ. So that's what QQQ and QQQM, have in common. They pretty much are built up of the same holdings. See what I'm saying? And they pretty much, as far as performance, they pretty much track the same, as you can see on this chart. As you can see on the chart. Now, how are they different? So if we come down here, you can see, look at this difference in stock price. QQQ is a lot more expensive. QQQM is a lot lower priced. See what I'm saying? QQQ has assets under management 298.82 billion. QQQM 39.73 billion. The expense ratio, this is one of the big differences, one of the ones that really affects you as a new investor. The stock price, You know, I recommend QQQM. One of the reasons I recommend QQQM to newer long term investors is because of this lower price. Get more bang for your buck. Simple. Then you come over here, the expense ratio, a lower expense ratio on QQQM. You always want a lower expense ratio, less money you have to pay as an investor when we're talking about fees. We've talked about PE ratio before. These are pretty identical, so we don't need to get into that. Dividend yield, pretty much the same, not too much difference there. Now, as you can see, like I told you, come down here to average return. As you can see, they pretty much track the same. As you can see, one's been around for a lot longer, 1999, and one's only been around since 2020. But 2020 on, they pretty much track the same. So, how else are they different? Well, we've talked about the expense ratio being cheaper for QQQM, so you're going to pay less in fees. Your barrier to entry when it comes to QQQM is cheaper, so that makes it more attractive for newer long-term investors looking to build out positions through dollar cost averaging or buying dips and things like that. QQQ is a lot more expensive. So how else are they different? When you're talking about QQQ, the biggest difference is liquidity, trading volume. So QQQ is something that has a lot of liquidity, a lot more trading volume than QQQM. So if you are a day trader, someone who's looking to trade in and out of the ETF, QQQ would be your go-to. QQQM, however, is not as liquid, doesn't have as much trading volume as QQQ, which for me, along with the other things like the lower price, the lower expense ratio, makes it more attractive for a long term investor like you and me. You see what I'm saying? So that's pretty much it, man. Holdings, the same, maybe weighted a slightly different. They pretty much track the same. Granted, QQQ has a much longer history because it was incepted in 1999. QQQ, a little more expensive. NASDAQ, not NASDAQ, QQQM, cheaper. The barrier to entry is more affordable, especially for newer investors. That expense ratio is cheaper and it's perfect for the long-term investor. Now, if you're a day trader looking to trade in and out of something quickly, you have a larger portfolio, you're not too worried about the price or the expense ratio. You're just looking to day trade, quick trades. QQQQ could be your go-to. But for this video, we're talking about long-term investing, something you can build out your portfolio with, dollar cost average, and build up over time. QQQM is going to give you exposure to the NASDAQ 100. Again, you look down and these are some of the holdings. This one is QQQM. You see that list of holdings, you're going to get exposure to all of these companies. As you can see, extremely tech heavy: Apple, Microsoft, Nvidia, Amazon, Broadcom, Meta, Costco, Netflix, Tesla, Google, T-Mobile, Cisco, Palantir, Pepsi. As you can see, I'm sure some of these names are familiar to you guys. So you're getting some heavy hitters with this. You're getting some heavy hitters, and even look at the chart, you know, it's up gradually over time. This dip, we've seen a small dip in 2020 as expected. We had COVID. 2022, whether they want to admit it or not, we did see a recession, in my opinion. Everything was down in 2022. Since then, we've seen it tick up, tick up, tick up, tick up. And that's what you want to see. QQQM, which is what is not financial advice, but this is the one I'm advising for new long-term investors who are looking to get exposure to the NASDAQ 100, the heavy tech sector exposure. QQQM. Dollar cost average, we talked about VOO last time, which gave you exposure to the S&P 500. Now we're adding in that NASDAQ 100 exposure with QQQM. Hey, man, easy money. I won't hold y'all too long. That's what it is. I advise you to do your own research before making any investments, you know. And again, if you are a day trader looking to trade in and out of something often, looking to make quick, fast trades, QQQ is going to have a lot of trading volume. You're going to have that liquidity for you. But that's all I got for you guys today. Stay safe in the markets, man. Don't get shaken out your positions, man. Don't become a part of those losses, man. Hold on to your positions, the ones that you have. And I'll say this: we've talked about VOO, we've talked about QQQM now. Go look. These are perfect times to begin to build out a position. When the VIX is high, I've talked about that on other episodes. When that fear and greed index is in fear and extreme fear, whenever there's uncertainty in the market, when people are panicking, that is when real wealth is made. That's when the real money is made. Unfortunately, during bad times, during economic downturns, during uncertainty, when people are losing their jobs, when people are getting laid off, when things are in disarray, that's mostly when the real opportunities arise. You see what I'm saying? Go check out the prices on some of these investments, on your VOOs, on QQQM, on even some of those, top tech companies we've talked about. Apple, Nvidia, AMD, Broadcom, Tesla, Microsoft, Google. You see what I'm saying? Food for thought. I'll see you on the next one, man.